Hi, I'm Will Marshall from Planet, and you're watching Taking Stock.
Counting down to the close, everyone. It is Wednesday, September 10th. This is Taking Stock, and I'm Kristen Scholler, live down here on the trading floor of the New York Stock Exchange. What a day it's been. You see a packed crowd here. We're going to take another look at that crowd in a moment. The S&P 500 hitting a fresh record today. That's after inflation data showed the pace of price gains cooled. Wholesale prices, in fact, declined by 0.1% in August from July, and they rose 2.6% last month from the same time a year ago. Both of these figures, in fact, less than what economists had expected. Inflation trending in the right direction and does all but solidify a rate cut by the Federal Reserve next week. A big day here at the NYSE for many reasons. One of them is the Swedish fintech firm Klarna making a rosy debut here in its first day of trade at the NYSE. Shares opened at $52 a piece after pricing at $40 a share last night in their IPO. This company looking at a valuation of $17 billion at the close. You can follow it with the ticker symbol KLAR. Software giant Oracle also a standout in today's session. We would be remiss not to cover this company. Let's take a look, though, at the closing bell as Access Financial is up there on the podium, set to celebrate the close of trade. Down here on the floor of the New York Stock Exchange. What a close, another record high for the S&P 500. We can take a look at the big board and walk you through these charts. The S&P 500 ending the session up 0.3% off its highest levels of the day, but still a fresh record. The NYSE Composite, for its part, up 0.5%. A little bit of slippage for the Dow Jones Industrial Average. That index down 0.4%. The Russell 2000, meanwhile, the small caps, they had started the session in the green about midday. They did turn lower, down about 0.2%. A mixed session on Wall Street. We're going to talk about Oracle throughout today's session, but it's one of the reasons, a key reason, in fact, that the S&P 500 did book a fractional gain and a new record high in today's session. I want to move on over here because I have a new guest that I want to bring in, Mark Hackett. He's a chief market strategist for Nationwide Financial. Mark, it's great to have you on the show today. Another record high for the S&P. What does this signal?
It's really kind of a sideways move with an upward trajectory, and what that really tells me is the bears are having a very hard time getting control. The bulls have both the technical tailwinds from a lot of the fund flows, the breadth, momentum, but also you're starting to see some fundamental developments too that are tailwinds. On the bear side, they just can't get any momentum going.
No momentum going on the bear side, and we've seen some fractional moves of late, not necessarily anything outsized or wide ranges. What is that signal? Are we in a wait-and-see mode ahead of that Fed decision next week?
Well, I think the CPI number tomorrow might get in the way of the Fed decision a little bit with regard to the news flow, but certainly there does seem to be a calm before the storm aspect with both the CPI and the Fed report. What really tells me, though, is reactivity that we saw through much of the year is no longer taking shape. So investors were very reactive earlier in the year. A lot of the news is somewhat similar to what we've seen recently, could have led to disruption, but it really isn't. It tells me a much calmer, much less emotional market.
Okay, so CPI, the Consumer Price Index, is certainly in focus. What do you make of the Producer Price Index today? Wholesale numbers actually coming in lighter than expected.
Right. If you look back 12 months ago, we had inflation easing and the payroll issues, which caused the Fed to move by 50 basis points. We'd been thinking the inflation was a little bit hot, but today's report certainly didn't show that. So if we have softening labor market, but also softening inflation, that does give the Fed a lot of leeway to move at least 25 basis points, most likely next week.
We saw the S&P 500 outperform in today's session. That index up fractionally on the day. The Dow Jones Industrial Average just fractionally lower. Oracle, a big boost for the S&P on the back of demand for AI. Do these numbers surprise you?
Well, the numbers, the absolute amplitude of the numbers do surprise me. I mean, seeing Oracle trade kind of like a penny stock is something we normally don't expect to see. So, but we've seen that quite a bit, that the AI space has such a huge tailwind that it's been driving markets for the last several years. The issue now, though, is the growth of that space is starting to slow from an earnings perspective, much more in line with the rest of the market. So now you have the gap in PE and gap in performance that's at pretty extreme levels starting to show its face. So I think as you move forward, this space is still very good, but it's also priced for that. So I think you're going to see a little bit more of a leadership shift going forward.
The capital markets coming alive this year, especially in a big way, just the past few months or so. Today, Klarna debuting a Swedish fintech firm, pricing above the range, opening up above that price point as well. What is this signal to you?
Well, I think the IPO market, but also the surge we've seen in M&A recently is really indicative that this is a much more dynamic market than we've seen. So now that you're seeing really an everything rally, equities, bonds, gold, crypto, and now you're seeing M&A and IPO activity as well. That just gives the market a lot more levers to pull in order to have positive returns, where we've been a little bit less dynamic in the last couple of years.
Yeah, the Fed, of course, is not going to be making any public comments until that Wednesday decision at 2 p.m. Eastern. Between CPI tomorrow, what else will be in focus for you ahead of that Wednesday decision?
Well, I think that is the number. So obviously the big annual revision that we got yesterday was the beginning of what is a cascade to getting us to that number. So the big last week's payroll number, this week's full year revision, and then the PPI and CPI. Once we get that, it's going to look a lot like what it looked like last year when we got that aggressive rate cut by the Fed with a softening labor market and also easing inflation.
All right, Will Hackett joining me down here. Mark Hackett, Chief Market Strategist for Nationwide's Investment Management Group, joining us on the floor of the NYSE. Thank you so much.
Thank you.
All right, our thanks again to Mark. Let's take a walk. I'm going to do a little handover here because we're going to walk and talk. We've got more than 100 people down here on the floor of the stock exchange for the closing bell today, including the bell ringer who's going to be joining us a little bit later in the show. We're talking about Axos Financial. Hi, guys. How's it going? Great closing bell. Yes, yes, yes. Okay, good. We'll be making our way down this way a little bit because we got to talk about Klarna, we got to talk about Oracle, two major movers on the session today. Certainly Oracle helping fill the S&P 500 to a brand new record high, and we'll drill in on some of those specific numbers here in just a moment. It is a sea of pink. You don't see that every day down here on the trading floor. Our traders know that well, but I kind of like it today. So let's take a look at that Klarna stock. The shares ending the day higher by about 15%. This is an online European lender making its rosy debut here at the stock exchange. Shares opened at $52 a piece after the IPO priced at $40 a share last night. That was above the range. These are all positive signals. And the company is looking to end today, it looks like, with a valuation of north of $17 billion. It does have the ticker symbol KLAR. Pink is the signature color. You know it as buy now, pay later. And we'll be continuing to watch Klarna here in the days to come. Let's move on over to Oracle. Todd, our cameraman extraordinaire, is going to zoom in on that Oracle stock. This one was a major mover, in fact, in today's session. Take a look at that. A double-digit pop. The stock closing up nearly 36%, was up 40% at one point in today's session. Booked its best day since 1992, issuing a strong forecast, reporting multi-cloud database revenue rose more than 1,500%. That is not a typo last quarter, on the back of demand for artificial intelligence. This company has a lot of major clients that it's been selling this particular software to, and investors embracing its upbeat cloud forecast as it does see $144 billion in cloud infrastructure sales by 2030 compared to $10.3 billion in 2025. We are going to take a quick break here, but we'll see you right back on the other side.
Welcome back. It's Scarlett Sieber from Money 2020, and we have a very special IPO edition of how fintech companies actually make money in store for you. It is super exciting. The energy up in here is crazy. If you've watched the markets at all today, you already know I'm talking about the Klarna, the Swedish buy now, pay later powerhouse. They made their big debut on public markets today. This has been one of the most anticipated fintech IPOs of the day, of the year, of the decade even, and you can feel the excitement on the floor, especially from this Swede. Half Swede, but I'm gonna take it and we're gonna go with it. This is our biggest moment in Sweden since the Spotify IPO and Daniel Ek. You know Klarna as the company that turned, I can't afford it right now, into, sure, I'll take it in 4 easy installments, why not? They've made shopping seamless, almost too seamless. I might not need another pair of shoes, but I got bored last night and there might have been a glass of wine involved, and don't judge me, moving on. How does Klarna make money when I buy that pair of shoes? Let's break it down for you. First, merchant fees. Stores pay Klarna a cut, about 3 to 6% of the purchase, for offering you the buy now, pay later option. Why? Because it works. Shoppers using Klarna tend to spend more. Retailers love when you spend more. Second, consumer fees and financing. If you pay late, there are fees. If you choose longer term financing, there's interest. But Klarna's pitch is clear. Stay on schedule, you're not paying extra. It's the friendliest credit product you'll ever meet.
For a US payments company to come into the markets that in Europe where Klarna has really succeeded is a very difficult thing for them to do. Klarna is hard to compete against in the markets where it's deeply entrenched.
Why is that? Just simply down to the first mover advantage, or is there a regulatory barrier there as well?
I don't know if it's the first mover, but I think we've been able to build a very successful, well-working product that's very appreciated by both merchants and consumers.
And it's a lot of hard work done extremely consistently for a very long time in the face of all sorts of skeptics and critics who never thought that a little payments company in Sweden stood a chance. It's ferocious determination plus delivering on the promise that's enabled Sebastian to get Klarna to where it is today.
Their story is remarkable. At its peak in 2021, Klarna hit a 46 billion valuation. Then came rising interest rates, consumer slowdowns, and yes, it did dip. But today, it's back, baby, on the NYSE, showing it has staying power. Klarna says it's profitable again, thanks to tighter operations and its heavy use of AI to personalize shopping, which I'm sure you've heard a lot about. This IPO is their way of saying, we're not just a pandemic darling, we're in it for the long haul. And yes, the financial innovation here was meaningful, and we rarely say that in a positive way, but the marketing aspect of Klarna is even more impressive. I sat down with David Sandstrom, their CMO, in Europe at Money 2020 just a few weeks ago, and wow, the way he broke down that strategy and what they built over the last 8 years, from blue to pink and so much more than that, is absolutely incredible.
How are you measuring success?
Okay, so let's start with the first one. I joined Klarna 8 years ago. Back then, as I said, Klarna was this blue, male, suited up B2B fintech, right? And we back then decided that either we go left and become almost like this white label B2B backend payments provider, or we go right and we try to build consumer preference, because this is where the world is going, both for us, for our partners, and we wanted to build almost like a modern aged Amex, right? Much more consumer friendly in our business model, in our products, and in our brand, right? So what we did in order to resonate with consumers was a deep analysis of the industry, and the bottom line was the banking and fintech technology industry was the most distrusted industry in the world, right? Everyone was blue, everyone was male, everyone was bureaucratic. So what we did in order to create this resonance was the opposite, right? We went more female, we went pink instead of blue, we rounded off the sharp edges of banking, and we pursued that for many, many years, for 8 years, right? And that is how we built this platform that I do think, again, Sebastian hates when I say a modern age to Amex, but I do think what they accomplished 30 years ago, where people actually were proud of their black Amex, I do think we are that, but in 2025.
Klarna didn't just build a payments product, it built a brand. Brand, brand, brand. Over 150 million users worldwide log in, not just to pay later, but even more importantly, to their bottom line and their IPO story to discover products. It's finance disguised as fun, and that's a big part of why people love it. So let's recap. How does Klarna make money? They charge merchants who want happier, higher spending customers. They earn from financing and late fees if you fall behind. And they've built an entire shopping ecosystem that keeps users coming back time and time again. Here at the iconic New York Stock Exchange, Klarna is bringing in a new chapter. A Swedish company built on installments just went public. One small step for the Swedish tech ecosystem, but one giant leap for fintech kind, back more with the fintech culture. And with that, back over to you.
Welcome back, everyone. We are taking stock down here on the trading floor of the New York Stock Exchange, this time right near the Cheddar set, and we want to talk some startups, raises, and rounds. First up, Klarna. Yes, it is a sea of pink here. Those shares surging in their New York Stock Exchange debut, opening at $52 a piece after pricing above the range. The buy now, pay later giant raised more than $1 billion, and it does value the company now at today's close at about $17 billion. Well, next up is BlackRock and a group of investors in talks to raise more than $10 billion to back an Aramco infrastructure deal. The financing would support gas facilities at the company's Jurufa investment, with banks like JP Morgan and Sumitomo expected to join. Finally, AI software developer Replit raising $250 million in new funding, boosting its valuation to $3 billion. The San Francisco startup backed by Google and Amex says its revenue has soared as demand for code generation tools explodes. So we got a lot of cool things going on there in that world. And I do want to continue this conversation about investments. Down here on the floor of the New York Stock Exchange, I'm joined by French Ambassador for International Investments, Pascal Cagney. Pascal, welcome to the New York Stock Exchange.
Welcome. Thank you for welcoming us. It's always a pleasure to basically discover the dynamism of the American economy and American stock action. So let me talk to you about why France is going to continue to fail in attracting foreign investment.
Okay, let's talk about that. So what specifically is the draw for France?
No, the truth of the matter is that with some massive reforms over the last 6-7 years, for 6 years consecutively, France has been the most attractive country of Europe, partially due to some reforms on social laws, but also reducing taxes and really having an entrepreneurship taking over. We had the privilege to welcome in France over the last years, aside of the Olympic Games, some amazing summits. The AI summit back in February, where $109 billion of foreign investment have been flowing into France to support data centers and the AI. Paris is really becoming the AI centers for Europe, which we are very pleased of. But we had also the Vivatech show, which is now becoming the largest IT show overall. So France is running in the same time. Politically, we've got some instability, but business and economy is demonstrating that whatever happens on the political landscape, the fundamentals of France remains, and that's very important.
I want to talk more about those international events that are really putting France on the map. You mentioned the AI Summit. What else is going on in the state of France?
No, you've got
Vivatech
two or three.
Is one, right?
You have got 2 or 3 focus where we have been really moving the needle over the last 6-7 years. The IT. We thought that we should have a forum, the Vivatech Forum, where we gather in excess of 150,000 people coming from all abroad. We believe also that we need to take the AI to a different level. We've got some amazing big name, which one day maybe will trade either at the Euronext or and at the NICE. Mistral, we just raised $1.7 billion with this other big success story in Europe, which is SML. All of that is telling you that behind the Seven Magnificent and the success of the US, Europe continues to basically its own road. Yes, we're fragmented, but we remain an amazing 450 million consumers that everyone wants to go after, right? With the second largest economy. So you've got the AI Summit, you've got Vivatech, we have the Olympic Games, and we're going to have the Choose France Forum, where we are gathering the 1,500 people, and they invested 50 projects with $40 billion. That's a testimony of the strength of France.
And let's talk about relations with the U.S., cooperation, and how you're looking to deepen ties. What can you tell us there?
No, it's clear that the tariff has been putting some pressure. Now we are, if not settled, we've got a clear road to go, 15%. The truth of the matter is a little more than that, because the FX and the weakening of the dollars made a huge difference to the company. In the meantime, we've been smart enough together in the aerospace to have both a zero tariff both sides, which I think is important, and few more exceptions. But all in all, there is a new way of working. I'm not pleased, we're not pleased, because we believe this is not good on the long run, but we need to deal with it. So we need to basically get our act together, extract productivity, and continue to export a product here, because we've been doing well for decades.
What is your message to investors as you try to attract dollars to France?
No, the message is that despite what they can see on the top news, on the political instability, is that the French economy can continue to be positive. The GDP is a positive one, the strength as such, that whatever is our debt and our deficit, which is huge and needs to be addressed, like actually in the US, we believe that the economy and the entrepreneurs will continue to strive, and we should see more of the French tech, of the French fab, more of the company becoming public here or in Europe.
All right, thank you so much, Pascal Cagny. He is a French ambassador for investment there, a delegate for international investments. Pascal, thank you so much. All right, everyone, well, coming up after the break, an interview with the bell ringer himself of Axos Financial. More than 100 people here at the stock exchange today to celebrate. We will have that on the other side.
The other way, there.
Welcome back to Taking Stock, everyone. We're live down here on the floor of the New York Stock Exchange, right near FinTech's set. And I do want to welcome our bell ringer. More than 100 people here in attendance today. Gregory Garabrands, President and CEO of Axos Financial. Gregory, welcome to the show today, and congratulations.
Hello, thank you very much. I appreciate being here.
Yes, great to see you. An incredible crowd here to celebrate, and a major milestone. What can you tell our viewers?
Well, so it's been our 25th anniversary at Axos, and we've developed into a diversified financial services company. Just hit $5 billion of market capitalization, and grown the stock really over the last 17 years at about a 7,000 to 8,000% return. So it's really been a great stock for investors, and we're really excited about what we can do in the future.
It started as an online bank, has obviously evolved to include more financial services. What all does the company offer now?
The company is really a full-service financial institution. We have a broad-scale consumer nationwide lending bank. We have mortgages, and then we also have a commercial business that offers a variety of lending products to businesses. And then we have a securities business with a custody and clearing firm. So we serve registered investment advisors and broker-dealers, and then we serve their end clients with our consumer products, allowing them to really replicate the features that a full-service financial institution would have, and allow those independent RIAs to have those same products as a larger money center bank would.
What are the trends that you see in the environment right now when it comes to lending?
I think that with the deregulation that's occurring in the banking environment, and I think with interest rates coming down, I see that there's demand on the commercial side, and I think the consumer mortgage side might get a little bit better too with rates coming down as well. So we really see a good future for what we're doing. We're very diversified, so for us we really balance a lot of the different lending categories we have, and we've been able to grow our loans double digits over the last decade, and we expect to be able to continue to do that.
What do lower rates mean for your business?
I think they mean that they probably ease the cost of borrowers on commercial real estate. I think they help commercial real estate valuations, and at a certain point, they'll help the mortgage market. It may take a little bit more rate cutting than is expected for that to happen, but I think that will help over time.
And what's on the horizon here over the next 12 to 16 months for Axos Financial?
Well, with the crypto regulations being lifted, Axos is going to be able to integrate a crypto wallet into its online platform, and we think we're going to be one of the first banks that are going to enable both the crypto trading and the online banking to be together in a way that seamlessly allows consumers to move between asset classes. So we're really excited about that. We expect ourselves to be able to continue to grow and really just develop that all-in-one app that we have for consumers on the digital banking side and just continue to improve it.
More access via the app, I'm sure, crucial to the customer experience. What are the biggest questions that you get from clients these days?
You know, I think clients really want an integrated all-in-one experience where the data that they have can be utilized to deliver good products and services to them that are tailored. So that personalization and that ability to really deliver products that clients want at the right time, in the right way is really important to us.
Anything else our viewers should know about Axos Financial?
No, we're grateful to be here, and thank you for the time today.
A 25-year anniversary. That is certainly a major milestone. Gregory, congratulations again.
Thank you very much. Thank you.
All right, you heard it straight there from the source. Gregory Garabrandt, he's president and CEO of Axos Financial. That company's celebrating the closing bell here at the New York Stock Exchange for that major milestone that we just covered. A great day to do some celebrating because the stock market, S&P 500, finishing at a record high. Keeps creeping higher and higher. Inflation data very much in focus this week, but some serious things to celebrate too. In addition to Axos Financial, we had Klarna debuting here at the New York Stock Exchange today. Great trading debut for that Swedish fintech firm. Priced above the range, ended today's session at a $17 billion valuation. And of course, that does provide conviction to the market on its record run. Oracle, a key reason, in fact, the S&P 500 was higher today. That stock ended higher by about 35%. Larry Ellison becoming the richest person in the world, surpassing Elon Musk, because a gain of that much was enough to push his fortune up by $110 billion just in today's session alone. Pretty impressive. And a reminder for our viewers, thank you for watching us every weekday here at The Close. We start just around the close at 4 p.m. Eastern, delivering you all of the latest market insights with expert voices and thought leadership, and of course, all of the trading action. You can catch it on the NYSE, FinTech, Money 2020, and Cheddar. We'll have a lot more action tomorrow, of course, and a tribute to 9/11. Thank you as always for watching. We'll see you tomorrow.